Okay, let's unpack this. We're talking about Palantir Technologies, a company that's been kind of quietly powerful for a while, but has just, well, exploded into headlines recently.
It's doubling in price just this year.
Exactly. Doubled. But the big question isn't just how it happened. It's where does it go from here, especially when you hear some pretty serious warnings about its price tag.
Right. Is it the real deal, the future of AI, or, is it a bit of a bubble?
That's what we're digging into today, trying to separate the hype from the actual data for you.
Yeah, our mission here is to cut through that noise, look at what's pushing it up, the real optimism, but also really examine those cautious voices, the ones raising eyebrows about the valuation, give you the full picture quickly.
As of Friday, July 25th, it was hovering around, what, $154.86?
Yeah, somewhere around there. Saw a high of $155.59 recently. It's definitely active.
No kidding. So what's really fueled this incredible climb? What's the story?
Well, it's the sheer speed of it, really. The growth in 2025 has been, frankly, explosive. Not just a little gain, like you said, roughly doubled this year alone.
Doubled.
Yeah. And if you look at other AI stocks, Palantir is right up there among the top performers, really standing out. And it's holding pretty steady near that $155 mark.
So that kind of growth, it can't just be buzz, can it? There has to be something fundamental underneath. What's the engine here?
That's the key question. And no, it's not just hype. The core driver is real solid demand for their data analytics and, crucially, their AI solutions, specifically their AI platform, AIP.
AIP, okay.
Yeah, and it's not just some generic tool. It's this customizable system that lets users, even non-data scientists, pull together complex data, build AI models, and actually use them in their daily decisions. Think national security, complex supply chains.
Okay, so really practical, high-stakes stuff, not just theory.
Their Q1 operating margin, for instance, climbed to 36%.
36, wow, that's up from 29%, you said.
Exactly, and 36% is, well, it's very healthy for a software company, shows real efficiency, real leverage as they scale. It's not just about bringing in money, it's about keeping a good chunk of it.
Okay, that's a strong sign. What about the actual revenue growth? Where's that coming from?
That's equally compelling, government revenue, up about 45% year over year.
Okay, strong.
But listen to this, commercial revenue, up around 71% year over year.
71%, wow.
Yeah, that really shows businesses are jumping in, seeing the value, adopting it fast. That's huge for their strategy of expanding beyond government work.
Those are serious numbers, especially that commercial jump. Big institutions are making moves too, right? That signals something deeper.
It really does. It's a kind of validation. A good example is the Ohio Public Employees Retirement System. A big pension fund, usually pretty careful.
Right, not just a hedge fund chasing trends.
Exactly. They recently added over 171,000 shares. That bumped their total stake to over 900,000 shares. When that kind of big long-term money moves in, it suggests they've done their homework and see real sustainable potential, not just short-term hype.
What's the cautious take here?
And that's the flip side, the crucial question. When does amazing growth become, well, overheated? Some analysts are definitely warning that PLTR is now, quote, extremely crowded.
Crowded, okay.
Yeah. JP, for instance, put Palantir in what they call the high-risk PARC group. That's Palantir, Coinbase, those kinds of volatile momentum stocks. They're warning about potential momentum burnout.
Momentum burnout. Sounds like the steam running out.
Pretty much. The idea is the stock shot up so fast on excitement, maybe everyone who wants to buy has bought, so there aren't many new buyers left to push it higher. And it could fall just as fast if sentiment shifts even slightly.
Okay, crowded and burnout. Those are serious warnings for anyone invested or thinking about it. Means it could be vulnerable. So is that the general feeling among analysts, or is it split?
It is definitely split. Very much a mixed bag, which makes it tricky, right? On the one hand, you've got optimists like Piper Sandler. They recently upgraded PLTR to overweight, set a price target of $170.
So they see more upside, about 10% more. That's one side. But what about the overall picture, the consensus view?
And that's where it gets really interesting and, frankly, a bit worrying for current holders. While Piper Sandler is bullish, the broader consensus among analysts is actually just a hold.
Just a hold, not a buy.
Right. And even more telling, the median price target from all these analysts is way lower, around $110.
$110. But it's trading near $155 now.
Exactly. That implies, potential downside of roughly 29% if the stock were to pull back to that median analyst view. It really highlights the tension. Are the bulls right about the future, or has the market just gotten way ahead of itself?
Wow, $170 target versus $110 median. That's a huge gap.
classic high-growth scenario. Big potential gains, but also big potential risks. Are you betting on the tech or the market's current love for the tech?
And that's such a crucial point for you,